Banks treat you based on how much money you have, and the difference is huge. I really want to talk to you about this because nobody tells you straight. Level 1. The account goes negative. Let's say your account went negative. $2, $250. Doesn't matter, the system doesn't care. Within a few hours, a $35 negative balance fee hits. And some banks charge this per transaction. Think about it. If you made 3 small purchases that day, that's $15 more in the hole. Think about how cruel this math is. Because you have no money, you end up with even less. When it should work the other way around. Imagine one day you go to a gas station to fill up. Your card gets declined. You try again. Nothing. Declined. There's a line behind you. In your head you're doing the math. Did I transfer money yesterday or not? This is where you come face to face with financial stress in its rawest form. The bank offers you overdraft protection, meaning instead of declining the transaction, it covers it, but charges you $35 for that. $35 so you don't get embarrassed at the gas station. Think about it that way. This is legal and completely normal. At that level, you are not a customer to the bank. You are a cost to be recovered. Level 2. There's a little money, but at least it's positive. Let's say you pulled the account back. You've got $200 or $400 or so. You're not negative, but that's about it. Every month a $12 to $15 account maintenance fee shows up. Did it ever cross your mind to ask why? Because your average balance is below $1,500. If you had $1,500, no fee. But because you don't, there is one. Isn't that a paradox? You're paying them to hold your money. You apply for a credit card. Maybe they approve you for a secured card. What does that mean? You deposit your own money as collateral. The bank lends it back to you and charges you interest. Your own money, given back to you as a loan. This situation is once again considered legitimate, legal, and completely normal. The service itself isn't bad at this level, just indifferent. The bank sees you as just a number. A small number. Level 3. Regular income begins. Let's say you start making $3,200 a month consistently. That's huge for the bank compared to Level 2, my friend. The bank won't tell you this, but its algorithm notices. And suddenly everything changes. Credit card offers start arriving, unsecured, with real limits. Things they wouldn't give you 2 months ago are now being dressed up and sent to your inbox. Because your profile has become a customer revenue can be generated from. You apply for a small loan, it gets approved. The process works. The bank starts behaving like a bank. Yeah, I know, it's actually a weird feeling. For the first time you feel like the system is working for you. You're officially starting to be valued by the bank. Level 4. Savings are growing. Let's say you have $18,000 in savings and another $22,000 in an investment account. You pay your credit card bill every month, no interest. Without you asking, your credit limit goes up. From $4,000 to $10,500, then to $16,000. You buy a car, the interest rate is 6.8% instead of 11%.
Why?
What happened? What changed? Actually, nothing changed for you, my friend. What changed is how you look between banks. You now show up in the system as a low-risk customer. You're paying less for the same things. That difference keeps stacking up. The system is slowly starting to tilt in your favor. Level 5. Assets above $250,000. Congratulations. Now when you call, your hold time is shorter. The bank immediately wants to help you. The person you reach is more attentive and practically eager to assist. Your problem gets resolved the same day. The concept of a dedicated banker kicks in. Someone who knows you, knows your account, calls you by name. Yes, The reason they can or can't do this is that your account appears in their performance review. But that doesn't make it any less functional. The access is genuinely real.
So, Monkey, what I am at level 5?
Level 6, $500,000 to $1 million. You no longer go to the bank comes to you. With a red carpet on top of that. Wealth management begins, investment advisory, tax planning, estate structures. The bank is no longer trying to sell you products. It's asking, what are your goals? What's your perspective on risk? There's a motivational side to it, there's a commercial angle too. But at its core, it's an entirely personal experience, and that's why both things are true at the same time. Even if a fraud alert hits and freezes your account, it gets resolved in the same conversation, right then and there. Level 7, above $5 million. There are products now that aren't published on the website. Rates that aren't posted on any board. Investments that require accredited investor status. Think about it this way. Back at level 3, when you applied for a loan, you filled out a form, waited 48 hours, the approved message came through, and you were happy. Here, your banker calls you and says, there's an interesting opportunity right now, want to talk? The process has completely flipped. They are calling you. Let's look at the mortgage rate situation concretely. Someone at level 3 takes out a loan at 7.2%. You get 5.8%. 1.4 points difference, you might say, but on a $500,000 30-year loan, that gap is over $180,000. Nearly another house. Same bank, same day, same product, but two different prices for two different people. And why does the bank do this? Because a customer like you almost never defaults. In the risk model, you are a safe harbor. On top of that, if you take a mortgage, you'll probably move your investment accounts here too, your business accounts, maybe your foundation. One customer, dozens of products. The bank is competing for you, not the other way around. Your advisory team is no longer just one person. One handles investments, one handles tax strategy, one handles inheritance and foundation structures. They work in coordination with each other. You meet quarterly, but the furnishings in that room and the coffee on that table are different from the sitting room at level 6. Most importantly, at this level, the bank is no longer thinking about what it can sell you today, but what's going to happen 10 years from now. Your children's inheritance structure, tax optimization, protecting assets as they pass from generation to generation. The bank no longer sees you as a customer, but as a relationship to be maintained. Level 8. Private banking. This is a different product altogether. Like the difference between first class and a charter flight, you'll get there either way, but the experiences are incomparable. Your private banker works with fewer than 20 clients. They know your children's names. They know about your foundation. They know what you're trying to build. Loan interest is negotiated, not published. A transaction that takes 2 weeks gets done in 48 hours, because the person processing the file has been told whose account this is. The rules bend. To be honest about what that phrase means, banks don't break laws. But every bit of legal discretion available within the regulations gets exercised in favor of clients whose relationships are worth protecting. Fees that could technically be charged get quietly waived. Exceptions that require manager approval get approved before the manager is formally consulted. The system that was automated and indifferent at level 1 is now human, attentive, and, yes, oriented. At this level, you are not a customer. You exist in a world where there are people who put their lives and careers on the line to not lose you. Don't underestimate your own worth. Yes, my friend, we've reached the end of another video. If this content added something to your life, don't forget to subscribe, like the video, and share your thoughts in the comments. See you in the next video. Bye-bye.